Hello guys, welcome back to Stacking Stocks, and thank you for joining us today. We hope you're super excited because we'll discuss an interesting topic about China Evergrande's financial crisis. Will the global economy feel the effect of China's Evergrande crisis? What should investors expect from this crisis? Well, it looks like we have a fascinating topic to discuss today. Sit tight, and we hope you'll get the answers you are anticipating. China Evergrande Group is a large property developer currently faced with a liquidity crisis that has shaken global markets, and we believe that it could send ripples across the global economy. This is serious news that investors should follow keenly because you don't want to be caught off guard. Such things could end up denting your investment portfolio due to massive losses. We also believe that the Chinese government will likely contain the issue at China Evergrande Group before it wreaks damage in the banking system, and it is not expected to lead to a broader global financial contagion. But we can never be too sure about it. Maybe the Chinese government might not come to the company's aid, and such matters can be scary to investors. Wouldn't you be scared if you had shares in China Evergrande at this point? The critical question for investors is how and when leaders in Beijing handle the situation and whether they launch a restructuring of China Evergrande Group, as many people expect. Investors have worried that Beijing is likely to let the company fail, wounding stockholders and domestic bondholders. Evergrande faces a debt payment on its offshore bonds, and the company seems to be facing unprecedented difficulties. Everyone was expecting the government would have some kind of resolution, given that Evergrande is a systematically important company. But that remains an expectation until the Chinese government actually chips in to help Evergrande. It has $300 billion in outstanding debt. There is a contagion issue if China Evergrande is not resolved. We think maybe it will end up having some deep-pocketed state-owned enterprises to take over. Even if the company successfully evades a financial crisis, it could still lead to more volatility. Can you see why investors should be scared of China Evergrande Group? Nothing is more dangerous than not being able to anticipate what will happen to the company, and we can't really tell if China has got extensive plans to help Evergrande settle its debts. The hard thing about particularly understanding China is that it's an opaque system, and often you don't have answers until you get answers. The banking system tends to be controlled by the government. There is government intervention that presumably would come in. We think for a period of time, when you wrap this into everything else, there are near-term financial questions around some of the other property entities, and when that happens, it can create some volatility and some financial contagion. Our sense is the government will act and it will stabilize, but there is no surety about that. Nonetheless, we can't rule it out as a possibility. There could be some caution around Chinese property companies and multidisciplinary companies for a period of time. There is concern that the already slowing China economy will be affected further and could flow into other economies. But that remains to be seen, and we believe that the Chinese government will do its best to salvage the situation. We don't think that any government would be comfortable with any company inflicting damage on the country's economy, especially if it also poses a risk to the global economy. The Chinese government needs to act quickly since Evergrande is beginning to affect sentiment after being ignored by global markets. It could be a self-fulfilling prophecy. This liquidity issue, real estate is so important to the Chinese economy and the financial well-being of so many Chinese families. We established that homeownership is over 90%. So many people buy apartments as an investment. So if this thing is not contained, it could become a real black swan. Many investors will incur massive losses that might leave them hopeless. The government needs to take into account that the property ownership sector has a lot of investors. Things keep getting interesting as we discuss Evergrande financial crisis. At least we think so. The impact of the company's financial crisis seems to run deeper than any investor would have imagined. That's why we began by mentioning that investors should be worried, if they're not already. Do you know that China's economy is one of the largest in the world? The fact that China's economy is so large could affect the rest of the world. If China were to have a serious economic issue because of China Evergrande, the rest of the global economy would have contagion from it. Does it mean that any investor interested in Evergrande and any other stocks that might be affected by the financial crisis should avoid them? We think ultimately the Chinese authorities will step in to ensure that the wider financial system doesn't run into crisis. If you're a property developer, you're facing a few bleak months ahead. The key distinction is policymakers will allow property developers to suffer considerable pain, but they'll step in to make sure the banking system is okay. There is so much at stake, and Evergrande's financial crisis should not be left unresolved. This is not the typical company decline that happens in the day-to-day investments industry. We're talking about a crisis that will affect the general Chinese economy as well as the global economy. It's a critical moment for the Chinese leadership, which has been carrying out a regulatory crackdown on internet companies, education companies, gaming, and other industries. The same needs to be done in the property developing sector. the leadership has the mandate to ensure that Evergrande does not succumb to its financial crisis. Many investors are now keen on how the government will respond to the Evergrande situation. We are seeking a different change in tone, the way the government is treating business leaders, and Western investors. How will they handle a bailout that everyone thinks is coming in some way, shape, or form? There are more questions than answers lingering in the minds of many investors. We're also trying to speculate on what investors should anticipate. As much as we think that the government might step in, we can't guarantee that they will. Will Western bondholders be bailed out? Will it only go to property owners who are owned apartments that are not yet constructed by Evergrande? Will banks take a haircut? More and more questions are being flooded by investors and as well as consumers. For example, have a look at this situation. There are about 1.4 million property owners who have paid deposits and await delivery of Evergrande properties. We don't know whether they can build the houses, but it seems unlikely, noting that some residences are already underway and at different stages of construction. The risk is, if there is also trouble at other property companies, property values will suffer, and there could be turmoil in the housing market. The consumer is a large factor in the Chinese economy, and a hit on housing could hurt consumption. That would also bleed into other regional and global markets through a weakening in the Chinese imports market as well as a slowing of demand for all sorts of raw materials. When you couple it with some of the regulatory changes in China, the clear slowdown in growth, the clear slowdown in commodity demand alongside that growth, there's some reason to pause and be patient about what's happening in the region. This is the point where any investor gets paranoid and strongly thinks about avoiding Evergrande. What do you think? We have reached a point where investors might have to avoid the company totally. But the growth of China economically and the intertwined nature of China in the global economy is massive. So China, as an important focus of the markets, isn't going away anytime soon. Evergrande's financial crisis has the capability of bringing down numerous, and we understand why investors would want to avoid the company. But is that the solution that will ensure the crisis does not affect the global economy? Definitely not. The China government needs to step up in order to protect the country's economy as well. Anyway, we're curious about how this will play out. Stay tuned and expect updates from us. Remember to like, share, and subscribe. See you next time.